Welcome to invidis Meets World. Today we are here in Lausanne, Switzerland with a special edition for you. We want to talk about the latest merger in the digital signage industry with some latest analysis, the latest listing, and Stefan, what else do we have to talk?
Yeah, Navori and Signagelive are joining forces to form the world's leading channel-only ISV. We'll take a look at the why, the how, and the what.
And what else? We want to talk to the leaders behind the deal. We will talk with CEO Jeffrey Weitzman from Navori and obviously Jason Cremins, CEO from Signagelive.
Yeah, and obviously we're also going to talk about the numbers. We'll discuss the deal logic and the impact on the ranking.
And last but not least, we want to talk about industry consolidation. M&A, we expect many more mergers to happen. We want to give you the latest insights why the industry should prepare for more. We left the lake. We're here now in the head office of Navori Labs. We at invidis consider the company always the most secretive digital signage software company because they kept everything by themselves. So we're really proud after 20 years of invidis for the first time being here, Stefan. Huh?
Yes, but there's a reason for us being here. Obviously, the merger announcement between Navori Labs and Signagelive. And let's talk about Navori first.
So what's Navori? I mean, Navori is one of the largest software companies in the
top
industry.
5 company.
Top 5, yeah.
And on very complete offering, that's what they're known for. They are partner-focused ISV, obviously, and very successful company.
Yeah, and we call them most secretive because not only that they never shared much information, but because many of their clients are not that well known because it's a truly global company. And compared to most other ISVs, they really, they have a big range of customers in the Middle East, in Latin America, in North America, many places. So that's something. But today they're announcing something special. They're joining forces with Signagelive.
Yeah, and what does it bring to them? First of all, it adds licenses. ARR revenue, and we know software is nowadays all about ARR, annual recurring revenues, and it strengthens them in their core markets in the US, in Europe, and it adds some presence in Asia as well.
And obviously, what's the impact on the digital signage ranking? We still have number 1, Strata Cache, followed by number 2, Samsung, and with Magic Info and VXT. And then now we have a joint third player. And Navori has now, through the unification, the merger with Signagelive, they've really now come up to number 3 player on the same level as Uniguest, but the only partner-only ISV in the world, right?
And that's what sets them apart. And if you really want an independent software as a partner, they don't play in the integration game. They are really partner focused.
Yeah. And truly global. And that's what's interesting. We mentioned already that Navori had already a nice footprint in Latin America and Middle East or so. But now Signagelive is adding their footprint, especially in APAC and Australia, that were really strong, and also in the UK together. So it seems like it's a pretty good match, huh?
But the deal is more than just adding numbers, adding licenses and revenue and presence. It's also about the management team. Signagelive has a really strong management team, a reputation for being thought leader, and combining the two teams. Navori has 25 years of experience in the markets. Signagelive's been around for approximately the same time, so it's really a lot of experience that comes together here.
Yeah. And Navori obviously also being probably one of the most profitable ISVs in the world. That seems like a pretty good match.
Yeah, it is. And from operational side, it also adds critical mass to the development team. They will have a team of about 45, 50 developers. And in times where AI is becoming more and more important, having critical mass in the development team is really a key factor in the industry.
We talked about the history. We talked about the current announcement, today's announcement. But let's look. What does it mean for the future for the combined company?
Yeah, it is very clear when Maguar acquired Navori beginning of the year, they publicly said they're going to follow a buy and build strategy. And this is just the first step on that journey. Obviously, we expect more acquisitions by now the combined group, Navori and Signagelive, probably to strengthen their key markets, US, EMEA, Also a little bit more in Asia.
Especially India. India, it's a really, really important market here.
They would probably want to add some real presence in the US, because currently Navori is operating from Canada into the US market. Setting up office there is probably on their agenda and roadmap, would make sense. And probably also buying some special tech features. I mean, they have now a very complete platform, but adding into that some AI know-how, adding probably something like ad tech in that area. We'll see. I mean, there are some special tech areas.
Yeah, there's still some white spaces where, they can complement their current offering. Absolutely. Nobody's perfect, but it's a very interesting announcement. So I think let's talk to the CEOs, huh? Let's cross the Atlantic. Hi, Jeff Weitzman.
Hi, Florian. Really great to be here with you.
Jeff, great to see you, and first congratulations to being promoted to CEO of Navori Labs. That's really cool news. But today we're here for a different reason. Today you're announcing your first acquisition of Signagelive. So what's the rationale behind the deal?
There's a lot of moving parts, and it's a really exciting time for Navori. I think to answer the question, you kind of have to start with where we're coming from. And to put it simple, Navori's been a digital signage software company for almost 30 years now. We're one of the global leaders in the industry, if not the global leader. We work in all continents, and we are 100% focused on software, and we are 100% a channel or partner-focused business. So when we look at potential acquisitions, which, by the way, is exactly what we said we would do when we set out on this mission, or I should say this new mission, back at the beginning of the year after the acquisition by Maguar, we said we were going to look at rapid growth, and we said we were going to maintain our focus and not change our DNA. And that's exactly what we're doing. We're delivering on the message that we started with. So if you look into the whole global market of digital signage, you'll see that Signagelive is a global player. They are a leader in their space. They have great executive leadership. They have an amazing staff. They have great market presence, excellent reputation. So for us, bringing together two digital signage superpowers makes perfect sense. It's a great way to sort of throw gasoline on the fire to really accelerate and turn into what we'll call exponential growth mode. So we've been doing great organically, and this inorganic move, this is the first acquisition, likely not the last. So I think the future is very, very bright for both our organizations, and I think the combined team is going to offer a new firepower that the industry has not seen yet.
So Jeff, what are the benefits for your customer base?
I think the benefits are there are multiple. And if I'm a customer of either Signagelive or Navori today, I would be very excited about what's to come. I think the big thing that's obvious is the momentum and the rapid growth, which means a ton of innovation. And when great minds come together, you get products that don't yet exist on the market. So Navori's always been a pioneer in innovation, as has Signagelive. And I think the next 12, 18 months, you're going to see a lot of that come to life. So as a customer of either company, I would be really excited about what's coming and what this means for my business. We both are very channel focused, so this broadens our scope. It increases the feature sets that are available, and gives us a lot more opportunity to grow and to explore other parts of the market.
But it brings also changes to your employees, especially for Navori and Signagelive. What are the benefits for your employees being part of a larger organization?
There's going to be many benefits. If I'm an employee today of either Navori or Signagelive, this truly means a lot of great opportunity for growth. As the company grows, the employees that work for that company get to grow with the company. And as we set new benchmarks and we strive to set new industry standards, the employees get to be a part of that amazing journey. This gives the joint organization even more established global footprint. It gives us significantly more feet on the ground. It gives us more resources to provide even more hands-on service to our customer base. I believe that the acquisition gives the employees something that they wouldn't have in either standalone company.
Let's talk a little bit about the joint Navori, the new Navori. So how are you positioned geographically and in vertical markets?
We've always said, and I believe it remains even more true today than ever before, in order to be successful as a digital signage software company, there are two very important components. One is having a global reach and international coverage. The rationale there is that you must cover enough of the market to have enough opportunities to keep fueling growth. The second is, in order to be successful internationally, you must have the ability to serve each customer base in its local market with local support, local sales, and adhering to the local customs and cultures. To do that successfully, a bigger team and a skilled team with experience coming from different regions around the globe obviously creates us a natural advantage that others may not have. From a vertical markets point of view, a digital signage platform such as ours does cover a lot of different end markets. And we like to believe that we are the most specialized in the entire industry when it comes to the software component of a digital signage solution. So what that means is we can manage content, we can manage data, we deliver content and data, and we handle the playback, monitoring and control over the endpoint that our customers are looking for. So whether this is a menu board, whether it's a FIDS display, or even a video wall or LED in a retail environment, we have the capability to perform in a multi-end market environment. That said, today in the industry, it's important to note that we have put a major emphasis on things like media and monetization. We are definitely the pioneers when it comes to the integration of AI and analytics into a digital signage stack. We have major innovation and capabilities when it comes to running in a headless environment, which gives our customers a new type of automation and capability to run in a more omni-channel approach than ever before.
Jeff, one question is really close to our heart. So what's next on the agenda? What will happen in the next couple of months? Can you share anything with us?
So there's a lot. As you can see, we're moving fast. 6 months ago, we were acquired by Maguar Capital. We set out on a mission to ensure we maintain the growth that we had been doing consistently year over year, plus add an inorganic component. So now we've delivered just that exactly as we said we would. And this is simply the beginning of that effort. So there's going to be lots of new exciting things as you look forward for the new joint organization. So this not only includes inorganic activity, but this also includes a lot of innovation. When the best minds of digital signage come together, and if you think of the joint number of years of experience between this new executive leadership team, taking that into account, the next generation of software that we will be jointly and are already jointly collaborating on, which will ultimately, we believe, set new standards and benchmarks for the entire industry, I think is exciting for us internally, for all our existing customers, and also for anyone who's looking at their current digital signage deployments, wondering what's next and do they have the right solution and is their solution future-proof. I think this is something to look at very closely, and we'll be excited for everyone that touches our space.
Thank you, Jeff. It was really insightful, and speak to you soon. Thank you.
I want to say thank you, Florian. Appreciate the time. It was a pleasure to speak with you and be part of this. We are very excited about the future, and of course, we appreciate your collaboration.
Jason, exciting times for Signagelive. Huh? You built up the company more than 20 years. So why did you decide to sell the company, and why did you join forces with Navori?
Yeah, thanks, Florian. Yeah, very, very exciting. A pivotal moment and the end of a chapter and the beginning of another one. Yeah, I think as a business, we've been organically funded for many years. And what we've seen is the market has developed. There's obviously been a lot of activity with regards to mergers and acquisitions. And in order for us to really maintain pace with the market and to be able to deliver on the capabilities that we want within the software and grow the organization, accelerated growth over and above what we've done organically, we took the decision to have a look and see what options were available in the marketplace. And as a result of that, what we did going into the back end of last year was to consider options for the organization as a board. and to look at ways that we could accelerate the growth in the organization. That led us to one of the options in the conversations we had was with the team from Maguar, given their acquisition last year of Navori. And from initial conversations, we knew that we were very well aligned. We were incredibly impressed by what Navori had achieved over the years and felt that their approach to the market, the way they conduct their business, was very much aligned to ours. So that's one of the reasons that we decided that we wanted to join forces with Navori.
That's quite interesting because for us, Navori has always been such a black box, right? I mean, it was very difficult on the outside, but once you learn a bit more, you see how profitable it is, how well run and manage the company is. So, and it's so different to your companies. But what does it now mean for your partners, for your customers, and also for your employees?
Yeah, that's a really good point. I think from our point of view, when we looked at the two businesses combined, I think our go-to-market strategy, our technical strategy, our geographic reach was hugely complementary when you overlaid the two businesses. And I think that was one of the big attractions, was that we could genuinely create an organization where there's very little redundancy. We combine the both businesses and create a force multiplying effect. And I think that's really important from a point of view of our employees, because it allows us to join forces with Navori and to attack the market at a global scale. And I think from our customers' point of view, it gives them the assurances that we're now a bigger organization with more resources available to us, both in terms of people, finances, security, scalability. And I think from a point of view of the technology, we now have a portfolio of capabilities that is second to none in the industry. From Navori's core focus in terms of, they've done around AI and computer vision, some of the ways they address certain sectors that we don't currently, combined with our open API first policy and our drive towards AI-enabled solutions as well. I think we offer a very complementary set of solutions that will empower our customers and our resellers to be more successful.
And a quite remarkable global footprint, right? I mean, it's quite interesting once you put both together, you see like, wow, that's great. You're strong in APAC and Australia, and also in parts of Europe and so. And Navori has been historically very strong in North America, Latin America, Middle East. So that's a good fit, isn't it?
Yeah, I think it's a fantastic fit. And I think that's the exciting part of the organization. I think when we look at the individual departments, we look at, the commercial team, and again, the augmentation of the commercial team. I think the ability to attack the market together is impressive. I think also there's, from a technical point of view, having obviously gone through and had a series of conversations with the team, where Navori is today, what the plans are for the future, what our plans are. There's very much a kind of coming together of mindset there as well. So I think, it's incredibly exciting.
Yeah. So I think there's always a worry, if companies grow together, that some of the leaders are leaving the organization. I think you have some good news to share, right?
Yeah, no, absolutely. I think, from my point of view, I'm incredibly impressed with what was presented by Navori and Maguar, and I'm doubling down my interest in the organization. So I'll be staying on in executive capacity in the group, and very much look forward to working with Jeff and the executive team to grow the organization. And I can say the same for Frank and Mark in our team as well. So we're all very excited. We're all very much involved in the integration of the two organizations and supporting, Navori and Maguar to grow the way that we would expect to over the coming years.
Jason, you're well known as an innovation, as a thought leader. So when we talk about platforms, so what is the future of platforms? Will there be one platform with many platforms? What is the trend? So where will the combined organization be in a few months, in a few years from now?
I think first of all, what we need to do and what we will be doing is looking at the capabilities of the two products, which as you can imagine has already started that process, and then looking at where else we need to enhance the proposition, especially in a world of AI. So the first job that I'll be working on with the senior team is to look at that commonality, and without giving too much away, as you can imagine, there is absolutely an opportunity to combine what both companies have achieved so far into a unified strategy and to bring to the market an unrivaled solution.
Well, sounds fascinating. We're looking forward to learn more from that in the upcoming months and hope to see you very soon. Thank you, Jason.
Thank you, Florian.
Today's announcement is one in a long row of announcements, and especially in the past days and weeks, we had a lot of announcements. So what is happening in the industry?
Yeah, if we're just looking the past 4 weeks, we've had the announcement of Econocom acquiring 4 companies. We've seen Vertiseit from Sweden acquiring MDT in Germany. So there's a special dynamics currently in the market. And we want to talk a little bit about why we see this dynamics currently. And it's very obvious from a financial investor perspective why this market is so attractive. It's because it's a growing market. So we've seen historical growth in low double digits range. So 10, 12, 15% over many, many years, although that's been a bit more volatile recently, but the general trend is there, the general growth trends. Then we see good profitability in this industry. Many companies are profitable, and it's a very fragmented industry. So a lot of smaller companies, and we all know software is a scale game. So you need scale and size to actually become profitable as a software company. And for ISVs, it's financial strength. So also requiring scale. So from an investor perspective, it's a very clear case, good growth, good profitability, and a lot of consolidation potential.
AI is a huge disruptor, but we get a lot of calls, and not really probably many in the industry, are really smaller companies are interested in selling their businesses. So what is the trend there?
Yeah, there are different deal logics in the industry. And for the smaller companies, the typical play is being an add-on acquisition. Because the private equity companies enter into mid-sized or larger companies, and then they are looking for additions to their portfolios. And that's where the action is currently happening. So we see a lot of add-on acquisitions.
We just general M&A trends and drivers. We have different industries within our digital signage industry. Talk about hardware. So what is the status quo there?
Well, hardware is a consolidated business, and it's a huge scale business. I mean, we're talking multi-billion companies like Samsung, like Philips, these guys. So don't expect too much M&A activity there. And then it's like sharp and NEC driven by different logics. It's not driven by digital signage business. But more interesting, where we see most action currently is software.
Yeah, we're here in the software. It's a software house, so obviously here in Navori. So what is driving consolidation of the software business?
Yeah, it is what we talked about. It's a scale game. And so in the past, you needed about 100,000 licenses to be a profitable software player. Because to sustain and to rewrite every 4 or 5 years your software stack, you probably needed about 100,000 licenses. But with AI, we see that actually going significantly up, probably to 300,000, 400,000, 500,000 licenses. That you need to support both the classical CMS software and AI.
And we're talking about a handful, maybe 2 handful of companies who have currently the size, right? That will mean that hundreds of companies out there are probably too small for a future business.
Yes, they are. But we also see those bigger companies already have their investors in the back, and they are looking for add-on acquisitions.
We talk about hardware, we talk about software, let's talk about integrators.
Yeah, integrators, we saw the first wave of M&A activity already a couple of years ago. With deals like Treson, Zeta Display, M-Cube becoming two significant players in the European space. The next step we are expecting here is actually across North Atlantic acquisitions or mergers. So European companies buying US companies or US companies buying European companies.
And then, at least for Invidis, it's a year of managed services. So we're talking about managed service provider, MSPs. So these are the typical huge IT integrators like Econocom, like CDW. These are the big guys with a few billion revenue. So what are these guys doing in the signage market?
Yeah, and that's a very, very interesting and pretty recent development we're seeing here. And it's really, they get creating dense service networks. So the game is about acquiring more and more companies in this space. But typically what they are looking for is more in the enterprise corporate environment, because they have the kind of sizes and dense networks that are needed to actually run effective service.
Yeah. And one, for example, is Ricoh. Most of you have heard about Ricoh, as a printer company or so, but they're now doing already more than $600 million annually just with Pro AV. And they're buying companies almost every month across the world. It's quite fascinating. So one of these companies where we just come across say, well, yeah, we know them, but they're very different than we always thought. Yeah. So, yeah.
And most of the traditional digital signage world doesn't have them on their radar. And they are thinking in lifecycle management. They are thinking in service. That they are not thinking so much in traditional projects and engineering and things like that, but it's really about the managed services part.
Let's talk about the sell side. So founders are, after 15, 20 years, they seem to be on the exit side, right?
Yeah, and that's the other side of the equation. For mergers and acquisitions to happen, you also always need two parties. Buy side, we talked about the logic. And sell side, yeah, the founders, most of them founded their companies between 20, 30 years ago. And now they're in a stage where the market is also becoming more and more difficult, and they seem to reach kind of a glass ceiling. So we see more and more demands from customer side, also from regulatory side, especially around sustainability, things like that.
Certification, IT security, it's a huge topic.
Yeah. All these things become more and more important. And for small companies, it's very, very hard to deliver on all of this. Then there's rising cost of technology. And we talked about AI, but there's also traditional CMS and IT security things raising the cost on the technology.
Also finding talents, right? We hear from so many out there who are really struggling and finding good, especially developers, software developers. Yes, AI helps a lot, but you still need some smart guys because, bullshit in, bullshit out, as we all know. So you need to have some good people there. And we hear smaller companies are really struggling with that.
Yeah. And on top of that, in recent years, we've got increasing uncertainty in the market. What used to be a very smoothly growing industry now has become pretty volatile business. So you might have a very, very good year, 1 year, and then somebody like Donald Trump coming into office and disrupting supply chains and things like that. And that requires a lot of financial strength. And as a small company, as a founder, it is very hard to actually buffer that.
Yeah. And what we all know, many players are just too small. Large global Fortune 500 companies want large suppliers. And if you just have a few million, even if a few dozen million, often they're too small. So it's really also this game, you need to have a certain size to be relevant as a supplier.
And last but not least, we've seen new competition. Now, we just talked about managed service providers. They are entering the market, and these competitors are big competitors. So that's also driving people to think about, where's my future in this market? You can always go niche, but to be a relevant player, you need size. And for some of the founders, it's also a question about window of opportunity, because it's right now where the consolidation is happening.
Yeah. Stefan, we talked about buy side, we talked about sell side. Now talk about the barriers. Why don't we see deals every hour?
We would love to. Now it's in the financial industry, there's this term of bid-ask gap. So the question whether buyer and seller find an agreement on price, pretty much. And I'm from a seller side. Typically, people look at comparable deals or what they think are comparable deals. So they look at valuations of past deals, and that's a bit problematic because some of the deals, especially in the integration part of the business, happened during the pandemic, where the industry was overheated or hyped. So very, very high valuations. So it doesn't help to look to the past in looking at valuations. And even if you look at current valuations, you have to be very careful, because there's so many parameters determining the multiples. It's not only revenue, it's profitability, it's growth, it's the sort of business, whether it's recurring or non-recurring. So many parameters go into that equation, how a buyer determines the value of a company.
And I just talked to Economy, and Econocom, and they told me, it's also obviously interest rates, because that's relevant for refinancing. And also they believe, we are at a 3 to 4 year low currently with valuations, because, the hype is a little bit, gone. We come to more realistic levels, at least for strategic buyers. For private equity, it may be sometimes a different game. So we see some of the deals which are a little bit out of norm. But if you look at, the vast majority of deals, it seems like we have reached like a plateau, where both sides, feel like it makes sense for them.
And I mean, we get the feeling that some deals that are happening right now kind of find that balance between not doing crazy things from a buyer side, but also not being bad deals for the sellers.
We get approached, and many out there we are interested in selling, and so we thought, maybe it makes sense to put together a small checklist. Because, it takes some work before you start, talking to potential buyers, really, to get your numbers together and everything. So you can download this checklist, but just go through one of the main points, right? I mean, what does it take really to prepare a company to be ready to be sold?
I mean, one thing we see when we talk to companies, it's a once-in-a-lifetime thing for most of the founders. You sell your company only once. So it's really worthwhile preparing for that process. And on the top thing it's always going to be asked is financials. So obviously current revenue, what kind of ARR do you have? It's profitability, positive, negative, zero. But it's also about growth numbers. It's about licenses and software. So that's the financial part. But you also need to be very clear in actually expressing your unique selling proposition, your USP. And that's very, very important, because if you're just a Me Too company, it's going to be very difficult to argue that your company is worth more than just the revenue it currently has. And then into that, the client portfolio, the customer portfolio plays an important role. Is it just one big customer? Is it a balanced portfolio? Do you have big logos, big companies, global names in there? You need to communicate that to potential investors.
Good, Stefan. I mean, there could be so much more, but I think, this is just for, if you're interested, please download the checklist so you get much more information and can prepare for that. So, Stefan, I think that was just a short ride through, where we are currently M&A market. So what do you think? What will the future hold?
More and more deals. I'm pretty sure about this and all the activity we see also behind the scenes. As long as there's a realism from both seller and buyer side, we'll see much more happening, and it's much needed. We need bigger companies in this industry. We need more consolidation.